So this little timeline, I think I'm going to do this quickly just to illustrate. So this is time, okay? This is the arrow of time. At this moment in time, this is when we've actually earned the revenue. Okay, so there are some times where the revenue earned and the cash exchange are happening at the same time. Okay, so in this case, so I guess we can call this scenario one, we would just have cash is our debit and revenue is our credit, right? Pretty straightforward. Okay, what about in situation two here? You first receive cash before you've earned the revenue. So what should we do? We're gonna debit cash because we're receiving cash. What is my credit? Revenue payable, kind of. Unearned revenue, exactly, right? So we've seen this unearned revenue, right? We agree? This is like when you buy your airplane ticket. You pay the cash to Southwest. They have a liability. They owe you um, a plane trip. So what happens when they earn it here? So this is again scenario two. What's gonna happen? Cash? I already received the cash. I received it previously. I received it back here. Exactly. We're gonna now get rid of that unearned revenue, right? So in this case, we credited unearned revenue, right? Here, we're gonna debit it, and now it's zero. We no longer owe that person that good or service, right? Because we did it. We performed that good or service. That's what happened when we earned this revenue. Does that make sense? Okay. So again, this is scenario two where we got the cash before we earned the revenue. Now, scenario three, we've also seen before where we earn the revenue and then we get the cash later. What is that? What's scenario three? Accounts receivable. Exactly. Accounts receivable, debit, revenue is credited. So you can see here in all three scenarios, revenue is getting credited because we earn the revenue when we actually perform the service or sell the item. Okay, so in all three cases, at this point in time, whatever it is, we're gonna credit revenue. When the cash is received, that's gonna change what we debit. Okay, if we collect the cash at the same time, it's this. If we've already collected the cash, it's this. And if we're going to receive the cash in the future, it's this. Okay, so it's the same thing with expenses. Okay, if we exchange cash, meaning we pay cash this time before the expense, what do we have? We're going to credit cash this time. What do we debit? We've already seen it now a couple of times. The word, what is it called? Prepaid expense, right? This is an asset. Okay. So when we actually incur the expense, we're gonna basically whatever call it uh, some expense. I don't know. It can be a number of things. If it was prepaid rent, it would be a rent expense. If it was prepaid insurance, it would be insurance expense. I'll just say expense debit, and then this asset prepaid expense gets credited. Okay, so we're kind of reducing that asset's value, right? Because we actually incurred the expense. We're using up that asset. Do we agree? That's why it's getting credited. So let me put some numbers to this. If I had a prepaid asset that's worth $1,000, and let's say from the time that I paid the cash till the time the expenses incurred, it's like $100 worth of expense. Okay, so I will basically credit this account $100 at this time. So it was 1,000. It's getting a credit for 100. That means I still have a balance of 900. Okay, so I still have this asset for future use, but at this time when I've incurred the expense, I'm reducing it. Okay, And of course, so this is scenario 1. Scenario 2, if I pay the cash at the same time as the expense, I have the expense and I pay the cash. This one is very straightforward because, again, the expense being incurred and the exchange of cash happened at the same time. Okay? Now, the third one is that I have an expense that I've incurred, but I pay it later. So what happens in that situation? What do I have in this third one? I still am going to expense this. So just like with the revenue, where I credited revenue every time, you can see here, expense, expense, expense. So I'm always gonna debit expense when I incur it, but now I'm gonna pay it later. So what do? Accounts payable, exactly. And then when I actually pay off the account payable, at this time, I'll get rid of the account payable. I'll debit it, and I would credit cash. So the takeaways here is that the expense incurred is always going to result in an expense being debited in any situation. Doesn't matter when the cash is exchanged. The expense is always going to be debited when it's incurred. Now, when the cash is exchanged, it could be one of three things: before, during, or after. And in each case, you're going to have slightly different kind of scenario. Okay? And it's the same thing with the revenue. Again, the revenue is always credited when it's earned in all three scenarios. But depending on when the cash is exchanged, we have to do different things.